Hello, this is Ernest Burley Jr., your CIA, your cool insurance agent, back at you again with some more great information on insurance. I'm a licensed insurance agent with over 30 years experience in the industry and clients all across the country in one capacity or the other. So whether it be auto insurance or life insurance, homeowners, condo, renters, disability, long-term care, business policies, church policies, professional liability, general liability, we kind of cover the whole gamut. So that's what we do. So the purpose of the podcast is to empower you, to enlighten you, to educate you with clear, objective, unbiased information so you can make some good decisions for yourself and for your family, for your business, for your church, or whomever. Okay. So that's it for the intro. Just wanted to give you a little bit of information about myself. This year will be my 25th year in business. Wow, this is crazy. I'm still a young guy. Okay. So let's jump into the podcast. Today's podcast is titled Two Key Ways to Increase Your Credit Score. Two key ways to increase your credit score. So now, several years ago, I interviewed like two of the major credit rating bureaus out there, Experian and TransUnion. Equifax is another big one out there, but I interviewed Experian and TransUnion. And I wanted to talk to them about credit score and FICO score, that's what it's called, the FICO score, and how people could positively affect it. You can infect it with some bad habits. And also what things would like negatively impact it. So I wanted to get some good information from them. So each one of them stated very clearly that there are many things that, of course, affect your credit score. But there are two key areas that they kind of focused in on and said these two areas kind of majorly impact your credit score, in addition to others. But these are two areas they kind of focused on: paying your bills on time, and also your use of credit or debt, whichever you want to call it, right? So your income has nothing to do with it. A lot of people think their income has something to do with their credit score, but that's not a factor in your credit score. You could be a multimillionaire, and if you're not paying your bills on time, or you're using a high percentage of credit or debt, you're going to have a poor credit score. Your income has nothing to do with the credit score, right? The credit score is, kind of based on your propensity to pay other people back, and how you're managing your finances for the most part through paying your bills and your use of credit or debt. All right. So here we go. Number one, pay your bills on time, right? Pay your bills before the due date. Always print a receipt. I always recommend clients print a receipt and save the receipt with the bill and file that away so you can prove or document that you actually made that payment if something kind of quirky goes on down the line, right? So just get you some manila folders, label each one of them like January, February, March, April, May, just label them, and then put your invoices and your paid receipts together in those particular respective files. So you'll have documentation for those bills that you have paid over time, okay? So that's the one, pay your bills on time. And of course, you want to print your receipt, attach that receipt to the invoice, and file it so you have that documentation for future use if you need to. So that's number one, pay your bills on time. Number two, use the proper amount of credit or debt, right? So regarding the use of credit or debt, if you have access to like say $10,000 of credit and you're using $9,500 of it, that's a bad thing. You're using 95% of the credit that you have access to, or the debt, whichever you want to call it. It's credit. You're using credit, it's a debt to you. So I'm just saying, whichever term you want to use, if you're using 95% of it, then that's not a good thing, right? Now, on the other hand, if you're using a small percentage of it, say 10 to 20%, and you're paying it timely, that can work in your favor because it shows you're using a small percentage of the credit that you have access to, and you're paying it on a timely basis. So that can work in your favor, okay? So those are two key ways to increase your credit score, or truthfully, to adversely affect your credit score too if you don't pay your bills on time and if you're using a high amount of credit. So let's do these things to make sure we're increasing our credit score, improving our credit score, maintaining it at a high level. Now, there are other factors too, like charge-offs. So like if a company is like written off some debt that you didn't pay, that's going to adversely affect your credit too. Now, you're still responsible for that debt, even though they write it off, you're still responsible for it, but that will adversely affect your credit. So you don't want any charge-offs on your account. And also bankruptcies, we know that will adversely affect you. So those are some other things. But these two things, like paying your bills on time, using the right amount of credit, and paying it timely, those are things you can kind of like work with, maintain some discipline, and use that to increase your credit score, right? Be wise, know how to play the game, right? Challenge credit will cost you a lot of money in the short term and in the long term, right? With insurance, I think we've talked about this before with insurance, when you're financing things like a car or a mortgage, um, it just costs you more money if you have challenged credit. But if you have good credit, you pay less to borrow money. So let's play the game right, know the game, be smart, be wise, and do the right things for ourselves. Okay. That's it for today's podcast. Okay. All about increasing that credit score, 2 key ways. Okay. Now, the recap is to pay your bills on time and to use no more than, I would say, 20, 30% max, but 10 to 20% is the ideal to use of your credit that you have access to, and pay it timely. So that's our recap. And our takeaway, our big takeaway is that you pay more with a poor credit score. Let's put it that way. You pay a lot more money in the short term and long term for services or what have you if you have a poor credit score or challenged credit. So let's get ourselves on the right side of that equation, right? And that's it. Hey, thank you guys for listening. I appreciate y'all listening every week and sending in the comments. I just received another comment yesterday that the person was listening to our podcast and sharing them with others. I appreciate that. So please continue to listen, and thank you for sharing the podcast. Please continue to do that. I'd like for you to listen and then share the podcast with others and encourage them to do the same, and so on and so on and so on. Okay. If you want to connect with me, my email address is very simple. It's just my full name at gmail.com. So Ernest Burley Jr. at gmail.com. That's ERNEST BURLEYJR at gmail.com. Or you can call me. My phone number is 301-262-2600. Again, 301-262-2600. And all of my podcasts are on YouTube. So you can go to YouTube and check out the various podcasts on there. And I have 1-minute snippets on there too that talk about various topics, everything from, like, we're talking about credit today, talk about a business owner being an employee, talk about insurance, various types of insurance, real estate, all different types of things on there. So take a look at that, renting versus owning. So we talk about all different types of topics on those different podcasts in those 1-minute snippets. So take a look, see what you may see or find interesting there. Okay. Now that is it. I encourage you to check out my podcast, go to YouTube, please subscribe also so we can get those subscribers up. And that is it for today's podcast. I like to try and keep them kind of like, short and sweet, but good punch for you. Okay. That is it. This is your CIA, Ernest Burley Jr., your cool insurance agent, signing off until we speak again or see each other again. Y'all take care and be safe out there.